Good afternoon, everybody. My name is Akanksha. I belong to Group M217. Our group comprises of 5 members, and we all together use our economic brains to study the banking industry of Australia. We pulled out some detailed theoretical and analytical conclusions through our economic journey. Let's see how it goes. So it's commonly known as Banking Royal Commission. Now let's see how it got started, what are the dominating banks in the industry, and how it went to the Banking Royal Commission and its downfall in the industry, and how it affects the Australian economy. I'm going to introduce you to the economic industry. So the economic industry is divided into 3 segments. It comprises of money circulation, which includes the issuing of currency notes by the authorized Central Bank of Australia, investment decisions like debentures, equity, and including the property and all the retail. And the second is the insurance policy services, which includes the services that is our car insurance, health insurance, and plenty of them. So by 2018, the company, that is the banking industry, employed 450,000 people and contributes $450 billion to the Australian GDP per year. A quick fact for you: did you know that the Australian banking industry comprises of 55% of the total assets of the entire Australian economy? Next, the sector is being dominated by 4 main banks. Now let's see what 4 banks are dominating the Australian banking industries. So, most of us can define the logos. That is the ANZ, Commonwealth Bank of Australia, Westpac, and NAB. So, according to our research, we find out that the Commonwealth Bank is using the foreign in-student policy, like it attracts the foreign people more to invest their money in their bank. But a quick fact, the most oldest bank of Australia is the Westpac, which was established in 1896. The 4 of the banks comprises of the small other banks, and of course everything has a rule and regulation, so all the small banks need to go through the Banking Act of 1959. However, due to some manipulations and misconduct, the entire segment, like the 4 banks, were fallen into the Royal Banking Commission. For now, they have to follow the rules and regulations. The next economic journey would be continued by one of my members.
These 4 banks and assets accumulations in these 4 led to downfall of banking industry in Australia. The impact was that, as a result, people of the economy started losing interest in the banking sector of Australia. That led to keeping money with themselves or with the dear ones. These adversely affected the operations of the market participants as well as the bank growth and performance over time. The next will be continuous my member, another group member.
Hello everyone, my name is Rajut Kaur and my student ID is AUMG3019, and today I am going to describe about the market structure of banking industry. So the banking industry operates in a very competitive market structure. The 4 major banks which has AAA ratings, financial institutions, smaller banks, and other foreign banks. There is no single bank in the market that can monopolize the industry. The prices and the interest rates controlled by the forces of demand and supply. All the major banks, they are taking a very large share of the market. The banking sector is controlled by Reserve Bank of Australia, and it helps in producing standardized and homogeneous products and even avoids exploitation of the bank stakeholders and engaging in the competition. What about the next? So this picture is showing like how the banks of the different countries, how they are contributing in the GDP percentage. The banks contribute to the major part of the GDP. There is no lead bank, has no monopolization in the industry. The banking regulations only allow retail banking activities through our locally incorporated subsidiaries. Locally incorporated subsidiaries were only allowed to operate as branches of Australian banks. So the most of the Australian bank's part, it is controlled by the Reserve Bank of Australia. That's it, thank you. And now I am going to invite my friend Gurjeet to describe the next part. Thank you.
Hi, myself Gurjeet Kaur and my student ID SS CS3006. Today here I am going to present impact of misconduct in the banking. Laws of banking reputation and investment declining in the banks are the result of misconduct of the bank staff. The NABs, ANZ are declining just because of their extra charges and no guidance. And the second main reason of losing is that the information of customers are not kept confidential by the staff members. This gonna leads to withdrawal of the borrowers, which ultimately affects long-term operations of the bank. Government integrates strict laws to control this operation. Now I invite to Bhavya and explain the further. Thank you.
Hi, this is Bhavya with the student ID KGL3015. And as my friend has discussed, I would like to discuss further about the scandals of the bank which occurred during the recent times. Let's start off with the Australian New Zealand Bank. Well, Australian New Zealand Bank is one of the 4 biggest banks in Australia, which has been working with great coordination, and it has formed a very strong financial structure in Australia. And looking at its scandal, Australian New Zealand Bank was accused of the scandals of the bill bank swappery. And even the Australian New Zealand Bank was implicated in the foreign exchange issues and was ordered by the Australian Securities and Investment Commission to donate about $2 million to a charity and allow the investigation of investment capital to scrutinize further on the exchanges, foreign exchanges which took place recently. And apart from this, the other scandals which took place are the Australian New Zealand Bank, Commonwealth Bank and the Westbank Bank. All the big officers and all the small employees have been involved in such fraud, and thus they were imprisoned and dismissed due to such misconduct. And let's further discuss about what impacts these factors have brought into the financial and banking sector of Australia and how they have impacted. So the first thing, the gross misconduct of the banks led to the loss of reputation of the banks, and hence people turned out to lose complete interest, and they are really scared to invest their huge sum into the banks. And these led to the decline in the level of investments, as I've told you, and the National Australian Bank, Commonwealth Bank and NAB are currently shredding, and their wealth management and their wealth economy has completely deteriorated over time. And next, these are also evident because the confidential information of the customers who have been investing in these banks have been open to the public, and this was very bad. And next, the withdrawal of 80% loans of the customers or the clients from these banks shows that this will rapidly turn out to be a credit crunch in the future, and hence there will be a great disruption in the banking. And further, some of the economic analysts predict that as the housing and credit card debt decline, the sectors can face a credit crunch. And after the crackdown, the focus from APRA will potentially turn to risk management. And finally, these subsequently leads